Now, if you're anything like myself and you're very focused as of right now in growing your total monthly and total yearly dividend income consistently every single month as fast as possible, but as safe as possible, keyword there, as safe as possible, then I promise you're going to want to stick around until the end of this video, because we're going to go through 5 different dividend paying, income generating, high quality, safe ETFs that not only have offered investors a substantial amount of high yield and a ton of dividend income from day one, but also have done it in a safe manner, relatively speaking, and all offer positive total returns, at least historically. So if you're looking for some crazy yielding, risky, dividend paying ETF or stock, this is not necessarily the video for you, because in this video we're going to go over high yield or ultra high yielding ETFs, but like I said, offer income consistently in a safe manner. So if you want to go through these 5 ETFs with me, like I said, stick around until the end, drop a like down below, subscribe, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, all these ETFs that we're going to go through, in my opinion, are safe because they offer a positive total return, some more than others, and offer strategies that I believe in. But number one, maybe the safest of all, potentially, is the Amplify CWP Enhanced Dividend Income ETF, or ticker symbol DIVO. So it says right here, why invest in DIVO? Income potential comprised of high quality dividend oriented stocks along with cover calls on individual stocks. Now, by investing into DIVO, you're not only getting exposure to a small curated high quality basket of stocks, around 38 as of right now, but also with a cover call overlay, you're going to be able to generate a much higher yield starting off compared to if you were just to buy all these stocks on their own. Now, because of this cover call overlay, you're not only going to seek lower volatility because of the overlay and the downside protection, but also on top of that, like I said, you're going to be earning around a 4.5% yield off the bat, which is not bad whatsoever. Now, like I promised, every single one of these different options that we're going to talk about all offer positive total returns, which makes them safe, at least in my opinion. DIVO, with a $10,000 investment since inception, has returned investors around 11 or 12% on average per year, or around 138% in total. With dividends not being reinvested, if you want to go ahead and spend that 4 or 5% yield on a yearly basis, let's say, you still would have returned around 10%, which is not bad whatsoever, or around 111% over the last 7.74 years, which makes DIVO a perfect option for a higher yielder that's going to raise your dividend income substantially much quicker. Now, this is another ETF that I've been buying a lot as of recently. Like I've shared with you guys, my objective as of right now is to raise my overall monthly and yearly income up as fast as possible, as safe as possible. And at least so far, SVOL or SVOL, the Simplified Volatility Premium Income ETF, has done exactly that very nicely. Now, I've made videos in the past of how SVOL works, so definitely subscribe to my channel and take a look at some of those, but just a brief overview. The Simplified Volatility Premium ETF SVOL seeks to provide investment results before fees and expenses that correspond to approximately 1/5 to 3/10 the inverse of the performance of the CBOE Volatility Index, or the VIX. So basically said, whenever the market goes down, whenever the volatility spikes, that can mean that SVOL is not necessarily going to do as well, because again, it's shorting the VIX. But when the market trades sideways and or trades up, the VIX is going to be low, which means SVOL is going to be performing pretty well. Now, SVOL has been paying around 30 cents more or less as far as total distribution for several months now, and on top of that, it does it in a tax efficient manner. What I also like about SVOL, of course, is that it's offering around a 16 or 17% yield, which again, in the context for this video, is going to make your dividend income, your total income on a monthly basis, go up substantially very quickly. But it's not just the strategy and or the income potential that SVOL offers. This ETF also has around a 10.4% average annual total return, and this is over the last 3.33 years, or around 8% or 9% if you spent those massive distributions along the way instead of reinvesting them. So still offering a nice positive total return for an ETF that offers around 16 or 17%. I personally am definitely still working on my SVOL position in my portfolio, and I've been buying a lot of it as of recently. Another higher yielder from day one, but also an ETF that's offering potential upside and has just done overall very well historically. I'm talking about JEPQ, the JP Morgan Nasdaq Equity Premium Income ETF. I'm sure you guys have heard about this one. You probably even own it right now. Now, in my opinion, this is an ETF that any dividend income focused investor should definitely look into, especially if they want some potential to upside, but also want a lot more yield from day one. Now, speaking of yield, we're talking around 10 to 12% as far as JEPQ's trailing 12-month dividend yield, and this is due to the most recent massive dividend that JEPQ and JEPI paid. Now, this ETF's objective is pretty simple. It basically utilizes the same cover call strategy that many other more income-focused cover call style ETFs use, which gives you potential of massive income, especially if volatility is a little bit higher. But on top of that, this ETF has also grown substantially over several different periods, which means there's also upside there. Now, JEPQ, historically speaking, over the last 2.35 years, so we don't have that long to go off with this one, but still over this time period, with dividends reinvested, we're talking 11 or 12% on average, or around 9 or 10% if you spent those dividends on the way. Either way, another ETF that offers a ton of income, has grown over time, and offers a positive total return, which in that case, sign me up right away. Now, everyone has their own degree of risk, so make sure to be careful with investing into anything in the stock markets. And just because I like these ETFs does not mean that you should buy them, of course. I'm just a YouTuber. I'm just sharing some thoughts and some things that I like throughout the markets. But this is one of my new favorites. This one is riskier. ZIVB, the 1x short VIX midterm future strategy. Now, this ETF is basically a lot like SVOL, but on steroids. This ETF offers around a 27% yield, which again at first glance is probably going to come with a degree of risk. But I have to say, at least historically speaking, over the last 1.4 years almost, ZIVB has outperformed the markets and outperformed a lot of other different dividend-paying stocks, ETFs, and even alternative strategies with around a 37.45% average annual total return. And with the altogether total return of 55% or 57% without reinvesting those dividends, this ETF has performed amazing so far. It's again pretty risky and a small portion of my portfolio. But again, if your objective is, like I said in the title of this video, to raise your income on a monthly basis as fast and as safe as possible, you're going to want to look for different stocks or ETFs that of course offer a high yield and have done so sustainably so far, meaning that they're not decaying like crazy, they're not offering a negative total return, and like I promised, every single one of the ETFs in this video are offering exactly opposite of that. Now, the last super high quality, higher yielder that could potentially raise your income a lot faster than other traditional options is the Goldman Sachs S&P 500 Core Premium Income ETF, or ticker symbol GPIX. This is an ETF that offers an amazing strategy, but isn't really talked about as much for some reason. It says seeks current income while maintaining prospects for capital appreciation. That's the objective of this one. And again, who doesn't want to seek a lot of income, but also have some upside? That's basically my entire objective of investing to begin with. Now, with GPIX historically, you're receiving around 33 cents or so in income on a consistent basis so far, which is sort of in the more tame range of around 7 or 8% if my math is right. And GPIX, like the others, hasn't been around all that long, but around 0.87 years so far, this ETF so far has offered 29% or 33% in total. And again, this is with dividends reinvested and around the same without. So at least historically speaking, GPIX has done very good. Like I said, I'm not really sure why this one isn't talked about a little bit more. As far as income potential goes, sort of tame income potential, this one could be an amazing option and an amazing ETF to get your dividend income, your total income in your portfolio up a lot faster, a lot sooner. So those are 5 of the highest quality, safest, relatively speaking, income-oriented ETFs that all offer yields north of what you're going to see across the market a lot of times. Now, of course, all these different ETFs have a different degree of risk and strategy, and just because one yields more than the other doesn't necessarily mean that it's good. But I personally have been utilizing a lot of these higher yielding options just as of recently over the last year, along with lower yielding stuff still in my portfolio. I'm not an income focused investor. I don't only invest in high yield, but because one of my main goals, one of my main objectives as of right now is to get this total monthly dividend income up as high as possible, as fast as possible, as safe as possible. But in the context of investing into higher yielding options that are relatively safe at least, now I want to hear from you guys down below. What are 3 ticker symbols I should look into next when it comes to the context of what I'm looking for? Drop them in my comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.